What's up, guys? It is Sam here, and I wanted to talk about my options portfolio and updates for July 22nd, which was yesterday. One of the things that I will be covering today is what entails rolling a position, and there's two ways to do that, so I'm going to talk about each one of those ways, and then just the changes in my portfolio yesterday. Before I get into any of that, if this is your first time here, what's up? I'm Sam, and if you're returning, it's good to freaking see you. All right, with that being said, let's get into changes in my portfolio. Okay, so first of all, I'll give you the objective of this portfolio is to make, about $250, $300 worth of profit per week so that I can pull off around $250 every week and purchase shares of something, right? And that way I don't have to continue to trade with all my money, and my portfolio is allowing me to generate income to be able to continue to invest in the market. And so this is going on week number 8. Last week I actually lost $47. If you want to check out that video, it's just click on the channel and look for that video title. So this week I did not purchase any shares in any individual companies or any ETFs. And what I'm trying to do is make up for that loss and continue to make that profit. So I'm not trying to get $350 worth of profit. I'm just trying to be consistent with what I'm doing. So I had opened up, let's take a look here. I opened up two positions yesterday. The first being a Amazon put credit spread. So there's 2 contracts, and the price that I got for these was 72 cents each times 100 shares, and there's 2 contracts. So the total amount that I received was $144 for 2 contracts. The expiration is on the 26th, so that's 3 days away. Yesterday, Amazon, let me see if I can pull that up really quick. Yesterday, Amazon dipped pretty early in the day in the trading, and that is exactly when I opened up the position, right when they were trading down. But throughout the rest of the day they continued to trade up, and they finished the day up. So that position is already profitable. If I closed out the position right now, I would make $62 in profit, but there's still money on the table. So the maximum, how the options work is the maximum profit I can get is $144. If it expires at $0 value on Friday, meaning that Amazon's price is higher than the top side of this position, which would be 1842.50. So one of the things that I do when something's trading down and it seems to be like an abnormal movement in the price, like why there's no apparent news that's coming out that just somebody's changing their position and that causes a market movement, is what it shifts the sentiment in the market to the direction it's going, and especially when it's dropping. On the upside, it's not nearly as strong as effect, but on the downside, it's tremendous. And all the sentiment gets shifted to the bottom half of the market below the current trading price, which means that if you're trading like I do, somewhere between like the high 80th percentiles to low 90s, meaning that's what this put credit spread is I will sell the one that's right around 90, and I'll purchase one that's even further out, generally by a $5 or up to a $10 spread differential between that. So this is a 1842.50 to 1835. So there's a $7.50 spread on this times 2. So there's a total amount of loss I could have is $1,500 on this position. However, the when the market comes down, right, and there seems to be no apparent material reason why the market's coming down, the sentiment in the market shifts to down here, and the prices of everything below the market increase, meaning that this position I got $144 for 2 contracts, but if the price was just kind of steady, maybe this would, I'd only get $100 for it. So when I see things where there doesn't seem to be any fundamental reason why the stock price is changing, but I can see that it's changing and the sentiment has shifted, that is one of the times when I like to open up some positions. I can use that as an indicator to open up some positions because the premiums get very, very juicy. And the current stock price of Amazon is at like $2,000. So this is like 150. Let's see. This current stock price of Amazon is $1,995. So what that means for this position to lose money, Amazon has to drop by about $150. That's a pretty substantial swing. It could happen by Friday. No doubt in my mind that it could happen by Friday. However, the probability of that happening tends to be pretty low, especially with such a gigantic swing, even though the price of Amazon is very high. If there's no substantial fundamental news that's going to affect the company's value and the price starts trading down, you're able to get in at a much lower point, which means that if the stock price just stays the same or starts to go back up to where it was, then you just were, instead of having to get in here at the 90th percentile, you're able to get in down here. So you're actually able to get in at a lower point, and a lot of times you can get a greater premium. So anyways, that is what I did with this position. The other position that I opened up last week on Netflix after they came out with their earnings. If you want to see a recap of their earnings report, just check out the channel. I opened up the Netflix, the put credit spread. I think it was 300 to 395 and a expiration of August 2nd. So that position was losing money yesterday. Netflix traded down to I think around 308-ish, and I was losing money on that position. So what I decided to do is roll that position. Now, what is rolling? Generally speaking, there's going to be 2 things you can do. Well, there's many different things you can do, but most commonly how I roll position is there's 2 things that I would like to do. I would like to increase the expiration time period. So as I mentioned, that was from August 2nd. That's when it would expire. I was able to push this out to August 16th for expiration on this, which means that it has more time to trade back up, given that there's no any additional negative or material information that comes out that affects the stock price. Obviously, there's other factors that could affect the stock price, the overall macro economy and whatnot. But given that there's no substantial material information that comes out that's going to affect Amazon's business between now and then, I would expect that as the earnings information is synthesized in the market, that the price would stay the same or actually increase slightly, given that their actual yearly or annual estimate didn't change that much for what they expect to do on a yearly basis. So that's the first part of what I would like to do with a roll for an option position. The second thing that I like to do, if possible, and this is not always possible, is roll down. So that position was 300 to 295, which means that if Netflix came down below 300, I would be losing money. And then I was able to push it out to 816, but it could still come down below 300, but I just have more time to expiration, so that's valuable. However, when it trades down, and you can't always do this, sometimes you're able to actually roll your position down on the price. So I was able to roll the position from, actually I think it was 300 to 290, so a $10 spread. I was able to roll the position to 295 to 285, still the same $10 spread, and move it out into the future. So you do two things by that. I moved the expiration date from the 2nd of August to the 16th of August, which means that I have more time for my position to make money. And I was able to move it out here and reduce the risk on the position because the expiration price is lower. So those are two different things. Those are two things that I always look for if I have to roll a position. And the thing that kind of like lays the foundation for both of those is that I only want to do those if I can do it and collect premium. So that's only one contract, but I was able to get paid to do that. So I took that position and I moved it further into the future, and I took some risk. I took more risk out of it by actually collecting more premium. Right, so if the maximum loss, say that the premium collected, I think was $180. So the maximum loss is $1,000, because that's the difference between the two expiration prices, 295 to 285. There's $1,000 difference between those, $10 times 100 shares, because that's what options pricing is based on. Most options are, and so that minus what I collected, the premium I collected, which was $100 to $80. So the total amount of loss on there that I could potentially lose would be $700 or $820. $820 is the maximum amount I could lose. Now, taking that position and moving it into the future and taking money off the table and reducing the exercise price is awesome. That's like a win-win-win, right? Because I moved it further into the future, I moved it down, and I received money. I only received $1, but it's still, so now it's $181 that I received, but it is still taking money off the table. Anyways, if you guys have any questions about any of this stuff, let me know down below in the comments. I will continue to keep you guys updated on the results. I'm not planning on opening up any positions today. If Tesla trades up, I have another position that is currently open. If the Tesla 220 to 212.5 puts that I collected $129 on average for two of them. So like $258 that I collected, and current market value is $54. It expires this coming Friday. This was an earnings position that I opened up, and if Tesla continues to trade up throughout the day today, and I can close this position out at $30, even though I could still probably collect that additional $30 between today and Friday, I will probably close it out just from the standpoint that if there's some weird anomaly in their earnings that the market interprets very negatively, I'd rather just take this off the table than hold on to that risk only for $30. If it was $100 or $200, I would probably hold on to it. But because it's only a small amount, I would probably close this position if I had the chance to do this today. And lastly, if you guys found any value, in this video, make sure you share this with somebody or press that thumbs up button, because then YouTube will share this with other people. But the last thing I wanted to mention is the ex-dividend day for Ford. I own 22 shares of Ford. So Ford just announced that I will be receiving a dividend of 15 cents per share on September 3rd. So I will receive $3.30 for my position in Ford. That is kind of interesting because I just opened up that position. I knew that it was coming, but it's nice to see that I'll be getting some cash back on this position. Hope you guys create an amazing day, and if you have any questions, leave them down below or reach out to me on Instagram. Don't forget to subscribe if you want to see other videos like this in the future. Peace.